Hello and welcome to Earnings Edge. I'm Hiral Dadia and with me is Agam Vakil. Clearly, if you see, three stocks that we are going to focus on in today's day of trade on the back of earnings. You have GFSC that has reported numbers. We'll be talking to the management. Cigniti Technologies is the second one. And thirdly, Ajmera Realty, three from diverse sectors coming in there. GFSC is the first one, 5.5% kind of cuts coming in on this counter. And if you see it from an earnings perspective, overall, you have the revenues which have dipped, margins have taken a beating, and the profits are down 71%. Mr. V.D. Nanavati, Executive Director of Finance and CFO at GFSC, joins in. Mr. Nanavati, good afternoon and welcome to the show. What's gone wrong this time around? Because clearly, you have seen headwinds in the external markets which are causing this kind of a dip. But how are you seeing the trajectory going ahead?
Yeah, so subsidy reduction against the rise in input was the main headwind that stuck in Q3. Most of the fertilizer companies are also sailing in the same boat. But going forward, we expect things to improve, not immediately in Q4, but next financial year. Maybe post-election, government will take a reasonable call on subsidy versus input price, and that should help in improving the margin.
Mr. Nanavati, this is Agam here. Can you tell us a little more about the demand environment at the moment and how things are panning out in Q4 and perhaps how things could possibly change in FY25 going in?
Yeah, so on overall basis, FY24, we expect a growth of 10% in fertilizer volume, and FY25, we see a growth of 25% in fertilizer volume. So we look for a robust demand and our brand value and the quality to play around. The new plant that has been commissioned in January 24 of ammonium sulfate, that will help in driving the volume in part, and Sika unit 100% production will help in increasing the volume. So we are sure to have turnaround in next year.
Okay, Mr. Nanavati, also a word on your capital expenditure. I'm looking at the investor presentation and you do have capacity expansion plans on the annual as well. Can you tell us about the kind of investments which will go into your capital expenditure and what kind of expansion, after the expansion, what kind of capacity can we expect from the company?
Yeah, so we are expanding HX Crystal project. We already have one plant. We are setting up another plant that goes for the pharma intermediates. There is a plan for setting up sulfuric acid plant. Then there is a solar plant coming for reduction of energy cost. And then we have a urea revamp plant for reducing the energy consumption for production of urea. So all this thing will be commissioned by FY25 year end, and we expect this to cost 1,000 crore capex.
Right. Mr. Nanavati, when you're talking about this 10,000 crore capex and the plans that you have, with the performance that we've seen right now due to the external headwinds, do you think there could be a delay in terms of spending the capex because the utilizations could be lower? So is there a change happening on that front?
No. As most of the plants relate to fertilizer segment. So as I said, we look for 25% rise in volume. So there is no question of this plant not operating fully. So in fact, we expect the plant to run. Of course, there are teething problems at the beginning, but then they will stabilize and produce fully.
Okay. So in terms of your ongoing projects, you have the HX Crystal project. You also have the 15 megawatt solar project in Charanka. Also the Urea 2 revamping project. Can you talk us through the timelines? You have mentioned a bit of that in your presentation. Can you talk us through how things will pan out here?
Yeah, so solar project is expected to be commissioned in June 24. And then sulfuric acid and HX crystal will be coming by September and November 24, and the urea revamp will come by February 25.
Okay. So if you have to look at FY24 and 25, what's that milestone expected to look like in terms of top line revenue and margins, taking the current run rate into consideration, and the additional sales that you will see on the back of the capacities that will come on stream in FY25 as well?
So right now we have not formed up our next year budget in terms of financials. So it will be little early to say top line and expected bottom line for FY25. We'll come back to that once it is finalized. Maybe we'll have a small call on this.
Sure. Finally, a word on debt as well. With the plans that you have on the annual, do you think that we could perhaps see that particular component increase going ahead?
Right now we are a debt-free company, and for 1,000 crore capex, I don't think we need any debt. So our recurring profit and past reserves are sufficient to give us the required funding. So, but when we come with the larger capex, those are also in the pipeline at different stages. I think debt will be required, but definitely not anything in FY25.
Okay, Mr. Nanavati, we leave it at that. Thank you so much for joining us and taking us through this quarter's earnings. We wish you the best. Well, on that note, it's time to slip into another short break, but we'll be back with more management. Stay tuned in. Welcome back, and now we take stock on Cigniti Technologies. Well, we've had earnings from there as well. Let's take a quick look at how the stock's faring. Well, marginally in the green for now, so certainly advancing, but it's been a little bit of a choppy day of trade for this particular company. That said, it does certainly look like a pretty steady quarter where we have seen revenues grow about 3.6%. And margins are largely flattish, barring the marginal decline. But let's get in the management of the company. We have Krishnan Venkatachari, CFO of Cigniti Technologies. Krishnan, good afternoon. Thanks for joining in. Can you take us through the quarter's highlights? What's led to this? And what are the expectations, keeping in mind the pipeline as far as deals go for this particular company?
Good afternoon, and thanks for the opportunity. It has been a pretty stable quarter considering the economic environment and where we were about a couple of quarters back as to what we envisaged. I think we were still our strategy in terms of working with strategic and growth accounts categorized and putting our efforts into these directions, and also coupled with that on the digital transformation has helped us consolidate the positions while the growth has been marginal at about 3.5%. But I think on the client wins, I think still we have won about 9 clients during the quarter, which is always a muted quarter with Thanksgiving and New Year and the decision making getting deferred. So that is one thing. And then our strength has been within the top 20 clients and the top 50 clients continuing to contribute in a bigger way for us, and which has been our strategy in terms of trying to push through and focus and garnering and winning a sizable pie through these larger clients. That is one thing. Having said that, I think on the margin front, we are while we anticipated the margin to move up, it would have been at about 14.9% on a normalized basis. But I think as a one-off expenditure on legal, we had to spend on certain employee separations, and that was essential and necessitated for us to get it out of the books. And that settlement took a toll, and we are fine with that. We know that for sure that will bounce back, and we're trying to improve on the margin front. Overall, for the year, if you look through, basically, I think the 3 quarters have been a progressive quarter, but I think the quality of the revenues and the consistent and the stability and predictability has increased beyond the level. And while we anticipated that, we initially anticipated that we should do a CAGR of average of about 20-22% over the next 4 years. I think that took a setback during the current year, where the growth could be in the region of about 8 to 10% comparing to year over year for the reasons in terms of the client deferrals and the economic environment. I think barring that instance, probably, I think we are optimistic, and we are running at the while we'll be able to sustain and maintain the EBITDA in spite of all these one-off expenditures up to the last year levels in terms of trying to get there. But I think the efforts on basically to improve it in the next year. We have just concluded the strategic discussions in terms of how much do we grow and what are the areas to focus and where we would move ahead with respect to the EBITDA in the coming financial year and thereon.
Right. Krishnan, Hiral on this side, one question I want to take with you on the margin front is clearly you have a strategy where you've actually started removing the low and negative margin customers, and high margin ones were onboarded as well. Now, taking that into consideration, the margin profile is still in that 12 to 12.5% range. How long do you think it'll take you to get back to that 20% mark, which we have seen in the past?
Yeah, I think in the peak history of the company, we have been there at about 17%, and currently we are hovering around 14%, which is at about 13.8. If you look at it on the EBITDA, you're talking about EBIT, probably I'm talking about the EBITDA. At a EBITDA level, probably we have measured, we are there at about 13.8, 14% thing. We are, as I told you, that we are taking extra precautions on the process front in terms of the businesses so that we don't slip out on this one-off expenditure. But I think we are pretty confident that we'll be able to get to the 16% in the coming year. That's a target in terms of taking a strong growth coupled with all this digital engineering and with the optimizations in various areas what we are trying to look through. I think we should be there at about close to 16% plus. If you ask me honestly that whether we'll be there at about 20%, the whole idea in terms of 2028 to reach, the original plan was to reach to $1 billion and move north of 18% plus to be there at about 20% or so. Is there? That's the target where we will have completely the digital engineering space contributing about 55% and 45% from the quality engineering space. That's a target, and it's a step-by-step target. But I think for sure in the coming year we should be there with a margin. I think it's a good point that we are trying to eliminate all the low margin yielding accounts, and even in this year and during this quarter and the coming quarter, we are eliminating few of the accounts, which should give a thrust for us in terms of enhancement in the margin here.
Right. Krishnan, in terms of the various segments in the clientele that you do cater to, where is it that you are seeing most amount of traction? Now, I understand that banking and financial services, at least for the industry, well, it's been a challenging environment. But how are things panning out there? And how are things panning out when it comes to your airline segment, for that matter, communications and energy and utilities? Can you talk us through this?
Yeah, absolutely. Fine. So if you look at banking, finance, and insurance, BFSI as a sector, if you look through very clearly that while the sector has been shaky, I think we are trying to position ourselves very clearly with respect to few of the banks, trying to be very clearly with them in terms of as an integrated partner. So with that being the case, basically, we have not seen challenges because we have not gone out and all and sundry to pick up the entire business which is coming through the segment. We have been selective, we have been careful, we are trying to get through using our tools to be a strategic partners with respect to these large banks and a few of the insurance companies. I think it's a very measured thought process which we are going. The traction what we've seen though there has been toughness in the market probably is on the retail and retail as a segment basically. I think we are contemplating with the idea as to how do we give a thrust to that basically because there's a lot of traction which we have seen in that as a segment, and then we expect a few positive surprises to come through in that segment which will come out at the right time if the kind of negotiations what we're trying to do, and that sector could yield us a sizable chunk of revenue. When it comes to travel and hospitality, I think the sector has bounced back. There is a frenzied travel which is taking place as we have measured clearly. The segment which took a hit during the corona and post-corona, but I think it has bounced back clearly on that segment invariably. If you look at for us as a segment, I'll come back to the energy sector, but I think the energy sector contributes at about close to 12% of the revenue, while the BFSI, retail, and the healthcare segments all put together contribute about close to 70% of the revenue. We see a huge traction in the healthcare as a sector because we work with medical tech companies, and we have mastered the art of trying to do the quality engineering on the medtech devices, and then that is one thing which is leading to a cross-selling of business for us. So I think we are optimistic on that as a segment. Having said that, probably we are trying to focus on a couple of segments, especially to lead it as a driver to contribute about close to 60% of the business, and which is what could be the strategy coming through in the current year. And one is positively on the retail side, and the other one is that we are trying to get through to BFSI as a specialization to contribute about 60% and then focus on the rest at the 40%. Coming back to the energy and utility sector, there has been a lot of consolidation in the energy and utility sectors. We did feel the pressure while the business has been contributing, say at about 12% or so. But I think the pressure on these sectors basically and their consolidations definitely has stagnated a growth a bit, while there is potential, but I think there is a stagnation.
Right. So I think these are few segments that one will be watching out for as well, pretty closely in trade. Thank you, Krishnan, so much for joining us on the show. Completely out of time. But clearly, overall, if you see in terms of the stock performance as well, last 1 year, around 70% is the kind of returns that we've seen on this counter. Let's quickly slip into a short break. Up next, we'll be joined by the management of Ajmera Realty. Yesterday, post earnings as well. The stock was seeing double-digit gains today as well. If you go to see in terms of Ajmera Realty, positive momentum is what is expected to continue. Please stay tuned.
Welcome back to Earnings Edge, and we now take stock of Ajmera Realty, where we have Dhaval Ajmera of the company who's joining us on the show right now. Dhaval, thanks for joining in. It doesn't certainly look like a very, very strong quarter for you. And we've seen good volumes, not just for the company, but also for the industry in general across. Can you tell us about the current business environment, the kind of inventory that you hold at the moment? If all of it is gone, well, what sort of projects are we looking for and forward towards going in to this, not only this quarter, but also in the next financial year?
So, we've had a great run through this quarter. This was been our best quarter in the last decade. Overall, the company has been, doing phenomenally well. We are working for a target of 5x growth in our company, and that is where we have moved ahead. Today, in this 9 months, we are very happy to say that our 9 months revenue has surpassed our last year's entire revenue in terms of revenue also and in terms of PAT also. So it has been a great run for us. Also, this year we have launched we've announced 8 new projects, acquisitions through either JV, JDA, outright acquisition or tie-ups. And that has been, very, encouraging for us, which is giving us which would give us a top line of 3,100 odd crores in the coming few years from these 8 projects, which we should be able to bring in the market in the next 9 to 12 months.
Right. Hi, Dhaval. This is Hiral on this side. I mean, I'll come back to the earnings, but a quick question when you're talking about, I was just seeing the debt profile as well. Now, with real estate, you have the RBI policy tomorrow. Clearly, with regards to cost of funds, are we at a comfortable level right now, number one, or is that becoming one of the hindrances with regards to business? And two, if so, do you think that the rate cut cycle should start tomorrow?
Well, we are definitely hoping the rate cut cycle should come tomorrow. With the overall global indices also being at a low interest rate, we are hoping RBI would also jump into this. This will only help, the cost of interest and finance costs coming down. Currently, our average debt is around 12%, which internally we are targeting to bring it down in this coming quarter and also overall in the next year as well. So with this RBI's policy coming in, I think it will even add on to our target to bring it further down. So definitely our target is to bring down something in this quarter itself.
Dhaval, can you talk to us about the big projects coming up ahead over the course of the next 2 quarters?
So we are going to launch one project in Bhandup. We are going to launch a project in Bangalore. We are also going to launch a project in Vadala. And hopefully there are 2 or 3 more in Vikhroli and in Warsaw, which will happen probably 2 quarters later than this. So overall in this financial year, we have 8 projects which we are overall looking to launch, which will give us a top line of about 3,000 plus crores.
Right. Dhaval, taking the overall launch pipeline so far into consideration that you have, not only for this year but going ahead as well, you're looking to launch all of it in the next 12 months. So there will be a spillover in FY25 as well. How much revenue recognition are you seeing out of it?
So we are, as I said, we are on the growth trajectory, and we are happy to say that we would definitely continue to move in the same lines. We will see how the numbers pan out, but overall, we will, by this coming quarter, once the year ends, we will absolutely know what are the projects which are definitely going to coming and what sales guidance we'll be able to give. So give us, I think by next quarter, we'll have more clarity, but definitely this year, we are looking at 1,000 crore plus sales revenue coming in this entire revenue, where 730 has already been done as pre-sales. And we would definitely cross 1,000 by this year end. And moving ahead next year, we are definitely looking at an upwards jump of at least 15-20%.
I just want to very quickly confirm the numbers that you've given us. You're seeing a revenue potential of 5,000 crores based on the projects that you have, and an expectation of 3,000 crores in the top line in FY25. Am I correct?
No. So we have all these projects put together, which we are currently having, plus the projects which we've announced. Total put together, we have a revenue potential of 5,000 crores, which shall be realized over the next 3 to 4 years' time.
Okay. All right. All right, Dhaval, we leave it at that. Thanks so much for joining us and taking us through your numbers. We wish you the best for the future. Of course,
Thank you.
The stock has been on a tear, and in fact, it was in an upper circuit yesterday, a 20% upper circuit today, and for good reason, because it's very evident in the kind of earnings that we've seen. Of course, a bout of very marginal profit taking coming through in today's day of trade. But say for that, it certainly has had a tremendous year, and based on what the management is suggesting, potentially could have another great year coming in based on the pipeline. But yeah, that's what we have in terms of earnings edge, Hiral.
Absolutely. And just one quick stock I think we need to address right now,
Yeah.
Agam, is a Paytm. Again, the stock has hit an upper circuit right now. So it seems that the markets are pricing in all the negatives, at least from a stock market perspective. There you go, 10% upper circuit as we speak right now. Buyers are emerging. So let's see where it goes towards the end of the day.
It certainly will be a very interesting stock to watch, especially with the kind of buying volumes that have come over the past couple of days. Yes, absolutely. We will be keeping an eye on that one. But we are completely out of time on the show. We're going to be signing out from now. It's goodbye from me and Hiral. But stay tuned to NDTV Profit, and we'll keep bringing you more.